Hello and welcome to Siebel Volatility 411. My name is Dan Deming and I'm with KKM Financial. Seeing the SPX giving up a little ground today, we saw it lower actually initially, trying to fight back. Still down on the day, and with that we're seeing the VIX cash popping up slightly today. But really when you look at it, not too far off of the lows of the week. Yesterday we saw a low print of 1470, currently around the 1520 area. So once again we're seeing a little bit of a pop in the VIX cash. But when you look at the VIX futures, we're seeing those up a little bit as well. We're seeing that front month future actually up a little bit more than the rest of the futures curve. I do want to point out though, we still are in contango, meaning that front month future is below the second month future, and as you move out on the term structure, flattens out, but still pretty moving more towards a normal type of environment. That roll market right now, though, has compressed. We did see the roll market yesterday close at 45 cents. That means the Feb March futures premium levels, about 30 cents today, so it has come in a little bit. Looking at realized volatility, I want to point that out. 10-day realized volatility about 18, 30-day realized volatility 11.5, and that means what the market has moved in those time periods. So you can tell that options traders are actually discounting the most recent or the nearer term realized volatility. It's more in line with that 30-day realized volatility when you look at the VIX cash around 1525 and 30-day realized volatility running around 11.5. Looking at VVIX, measure implied volatility on those VIX options, trending lower today. We saw a high 97, right around 95 now as the market's climbing back up a little bit. Well off of the highs of the week, and then actually we saw the lows yesterday around 92. So again, at the lower end of the range for the week. Activity, we're seeing some call activity. We have not seen the big buyer yesterday. Mike Palmer pointed out that 100,000 lot traded in the March quarters, I believe. Not too pronounced today. We did see March 28th trade about 28,000 times. We are seeing some out-of-the-money call buying taking place in both February and March. I do want to point out that if you look at the open interest in February, between the 20 and 25 lines, substantial open interest there. So I think that's an interesting dynamic as we moved into a week and a half out from expiration. Next week, we've got CPI, we got retail sales, we've got some earnings, and then the coronavirus, I think, is still driving the market expectations as well, particularly on the growth aspects, is economic growth, and I think that's why you're seeing the vol remain a little bit elevated, actually, as we close out the week.